What is up? Time for a portfolio update on our challenge turning 2,500 Australian dollars into $1 million. And first of all, I want to clarify, I understand that is a grifter clickbait finance YouTube title, and I promised myself when I started this, I will not be like one of those grifters. Grifting, yelling the whole fucking market's on fire every month. Sell, sell, sell. I swear most of these financial influencers has been telling you to panic sell for the last 5 fucking years. I should stop swearing, it is YouTube. And then there's the other ones that are grifting, selling courses, and then there's the other ones lying about trading results. They're trading on a fucking paper account. I need to stop swearing. So I promised myself I wouldn't be one of those grifters. All right, I'm going to be full transparent with everything. And what you're looking at is my live trading account. But my only caveat to that is, look, I get it's a grifting title to this video and this whole series, but we've got to draw people in somehow. Let's leave it at that. So what you're looking at is my live trading account. This is my second portfolio update. Now, this is a challenge I've put together where it's money that don't really care if I lose. It's a part of like a challenge. Call this like a slush fund, if you will. Started at 2,500 Australian dollars. If we go to all, which makes me look ridiculous for whatever reason, Interactive Brokers says I'm down by 96.7%, but it's incorrect because if we swap to value, you can see whatever reason, if you withdraw money from Interactive Brokers and put it back in, it fully screws up like when you look for your all-time performance. And I've tried to call them and get it fixed because it just makes me look like a fucking loser who's lost all their money and has created a YouTube channel about it. But yeah, I don't know why. If you know how to fix this, just please tell me, because I've tried so much stuff. But yeah, when you go to value, the value is not even accurate because that value looks like that value, and it's not, because I initially started with $2,500. So I thought I would clarify that. Now, anyway, as you can see, this is an update. So I watched the original video for the pre-tax. Started with about $2,500, like maybe less, but we'll just say $2,500. Didn't do anything. I honestly just held one stock for ages and didn't actively trade. Sold that stock around, I think it was around this level. So I made about 70% return, but did have to hold for 2 years. I've done a little bit of option trading back here as well, like aggressively, but was just kind of experimenting when I was learning a lot about options. Now, sold here, started aggressively trading options and owning options, a bunch of different strategies I was sort of testing and trying because, like I said, a bit of a slush fund account, and I just really wanted to trade as much options as I can because I've been learning a bunch about options over the last 10 years, and that is going to be kind of my job and has to do with what I'm studying at the moment. So, hence, done okay. You can see I mean, was whipsawing around, but anyway, got to here and decided I can't just. I was doing like risky trades, man, and options, like full naked straddles over earnings and all sorts, but not just doing a nilly-willy. I mean, I've done a bunch of back testing and all sorts, and forward testing and everything with selling naked straddles over earnings, and the results are pretty good, and I've done a few of those trades, and I did do pretty well. But the problem is I work 12 hours a day with my current job. I live in Perth, Australia. It is the complete opposite time zone to the US, and I own and trade US stocks and options. Now, my trading times here, the US market for me opens at 9:30 p.m. and they shut at 5 a.m. and I work 12-hour shifts. We work on a mine site, if anyone's wondering. So I'm in a camp as well in the middle of the outback, basically. It's almost impossible for me to sleep while I'm stressing about naked option positions. So for that reason, I decided to just build a portfolio and then started to, and this is something I want to share with you guys. I started to build a portfolio of stocks. I will still probably add in some option trading, and I'll fully show you guys when a good sort of trade rears its head, and we'll throw that in as well. It's not just limited to stocks, but here, just started building my portfolio, and you can see we've been doing pretty well. I'm up about 70% since I started that, which was only 3 months ago. go to 1 year. Let's go to performance. So looking at the last past 1 year, our port is up about 120%. And this little purple line is the S&P 500, which is in that same time period up about 15-60%. So we are mogging the S&P 500. Just absolutely mogging. We can compare it to a few other things. Let's go to the NASDAQ, which is probably higher returns. Mogged again. Mogged again. Let's look at the Russell. Just mogged even more. So yeah, we're mogging the market average. And I know there's every comment section I look on any sort of financial post, whether it be TikTok, YouTube, there's always those nerds in the comment section that, well, did you know that those returns are theoretically impossible? Statistically, you can only gain 8% a year per annum in a diversified ETF, and they just rabble on. It's like, dude, we know. It's so annoying. They are one of the most annoying. Like, I would rather full gun-selling Wall Street bet gamblers than those virgins. Because it's like I don't want to get into it. It's like they pretend, it's like a fake smart guy. Like, they're the worst types of people. I'd rather just someone who's an idiot. They're like fake smart. Like some sort of fact that they've seen or a video they watched that's reciting. And you don't need to say that, man. We know. My largest account is a diversified ETF portfolio with regular investments, and I shouldn't even need to say that. I think this should be obvious by now. Boils my blood. Year to date, 88% year to date. Month to date, 21%. Last 7 days, 9%. So we're on fire. Let's break down our positions. All right, so Reddit is my top performer. I'm up 68% with Reddit, and I brought Reddit at, let's look at it. Average price 156.37. You can see this blue line here. So I did have a really good buy-in price with Reddit. Brought in just before their last earnings, and luckily their earnings was a killer. So yeah, Reddit's been going good. Reddit has been it's an interesting play for me because a lot of people think that their earnings is coming and will be coming more from ad revenue. They've actually got another revenue stream where it's not just ad revenue. I think this is pretty recent, but they've actually, so AI, Google, ChatGPT, whatever, when you ask a question, sometimes, a lot of the times, to get the answer, it scrapes Reddit, finds the data, then outputs its response to you. A lot of the time it does that. Reddit's discovered this, like the usage of their APIs from big corporations like Google and ChatGPT or whatever, and they've decided, fuck you, we're going to charge you for that. And they have now been charging. I think they closed recently it was like a $60 or $80 million deal with Google or something like that. So they've started pinging people for you from doing that. I mean, in the day, it's your data. Like, why not charge it? So that's another interesting, very interesting revenue stream. Because you think about it and you're like, yeah, it obviously comes from ad revenue, but there's another way. And I think that's quite creative. And they're still trying to work out their whole ad revenue system. And once that continues to be better, it could just continuously go up. And you shouldn't really compare it to other social media companies because every social media company is a little different. Just trying to find its market cap. Oh, you can't really see what I'm doing here. Oops. I know it shows market cap here. Market cap is about $50 billion. Now, if you want to compare that to other social media companies, like, look, Meta is fucking huge, right? They don't just own Facebook. They are massive. $2 trillion market cap. I mean, do I need to say more? What other social media? X is private. Meta also owns Instagram. So don't have much to compare it to, do we? Not really. Yeah, 2 trillion. But look, Reddit just has Reddit, basically. You can't really compare it to Meta because Meta has Instagram. I think they got WhatsApp, Facebook. They got a bunch of shit going on, so it's not really a fair comparison. But still, think about this as it could be a baby. who knows? They might expand, they might do more stuff. So I'm holding this. I'm going to continue to hold Reddit for dear life. Now, the only issue I face is this is 90% of my portfolio. Well, not 90% actually, because I've leveraged the rest out. This position is about 11,000 Australian dollars, and if you look here, my account is 12,500, so it's about 90% now. Yeah, so I was going to leave my little discussion about margin towards the end of the video, but anyway, we'll cover a bit of it now. So I'm using margin. I'm leveraged to about 1.8. So 1.8 is, you can see I've got $12.5 thousand. So if I sold everything today, I'd walk away with this amount of cash. But my total account, it doesn't even show it here. Between this and the app, it's completely different. Anyway, my total account balance is, I think it's that plus that, which is about $22,000, $23,000 is my total. Like if you added up all these positions and converted them into Australian dollars, it's about 23,000 Australian dollars. So I'm borrowing this amount, $9,000 I'm borrowing. So you can view this as I've gone to the bank and I've taken a $9,940 loan and I've invested it. Like any loan, I have to pay interest. I think it's 5% PA or around there, so it's actually not bad. So long as my port goes up more than 5% a year, which I'm up 120, it was worthwhile taking the leverage basically. Now the problem is when your port doesn't do well and it goes down, what can I handle? So I've got a thing here. So starting value, let's just cover the margin. So the current margin is 1.8x. At a 50% port increase, the leverage drops from 1.8 to 1.4. At 100%, it drops from 1.8 to 1.2. So that's what I hope is going to happen, or I'm going to add in more cash. Now, if my portfolio drops, I thought I wrote it down here and I didn't. I wrote it somewhere, but basically I can handle a 40% drop before a margin call. So I would need my entire port to drop by 40%, which, if you know markets, that ain't out the realm, mate. That can happen. So what do? I want to keep my leverage between 1.2 and 1.5. I think that's safe. I'm happy with that because it's going to take a horrific market crash to force my brokerage platform to liquidate my positions. With that kind of leverage. I just had a brain fart for a second. So to get my leverage from 1.8 down into what I call a safe amount of leverage, between 1.2 and 1.5, I either need things to go up enough, and like I just showed, I need a 50% increase for the leverage to drop within that range. It's no different to your house goes up in value and you use the liquidity to buy more stuff. Or I can just put in more cash. So that brings me to what I'm going to do with Reddit. Because that's a huge chunk of my portfolio, and Reddit is going to be steady until the next earnings. But if we get a surprise earnings call and it's bad, this is where it is highly likely. If we get a huge 40-50% drop, I don't think it's going to happen, but if it happens, I could get a margin call. Because it's a big chunk of my position. So plan. Before earnings, which is November 4th, I've got some time. All right, I'm either going to put in maybe about $5,000. I don't want to put in much because I want to keep this an actual challenge from the starting amount to the finishing amount, but I'm going to have to do something. I'm either going to put in $5,000 or I'm going to reduce my position in Reddit so it brings my margin down to that 1.2 to 1.5. Done. That's all I need to do before November 5th. Okay. LEU has been performing really well. Brought this 2 weeks ago. I've actually done a full LEU stock report. If you want to read that, go read it. And that is up 52% in 2 weeks. UENH is up 36%. I love bragging about this because I brought it here, by the way. I wish it showed the date somewhere. Here, on August 8th, I bought a position. See that blue line? I might be the king of buying the dip in this situation. If it keeps going, I might be the king. Because the last time it hit 247 was in the COVID lockdown crash. So in the last 5 years, me and maybe a handful of guys might have the the lowest average position. Look at this buy. It's full luck, by the way. I know a little bit about it, but it wasn't like a full due diligence research like I did with LEU. But I'm just like, my basic thing, I just brought it with 15 minutes of research, and all it was, okay, there's some things that aren't going their way. Now, since Luigi Mangione gunned down the CEO, it was in my mind that that's why it's down. Their revenue has stayed the same or actually gone up slightly since then, and we're about a year past that event. So it hasn't affected the share price at all in terms of revenue. So if they're still producing the same amount of revenue before the CEO got brutally murdered, why is the stock being sliced in half, more than in half? And there's a few things. Apparently there's some regulation coming in, but it's a bit wishy-washy. And I just don't think it's worth... I still think it's undervalued. I just do not think that it deserves a 247 share price. And that was basically behind my decision. It might not be the perfect company. The whole sector might be getting bossed around by the current government or whatever. CEO getting shot doesn't help. Their revenue is still the same. Numbers don't lie. So I just got a position. And that's that. So far doing pretty well. And I got this position, a month or two ago. Fucking great, doing well. Let's look at the next position. SPY is up. My average position on SPY is here. My goal on SPY is simple, easy play. Every time we get a huge correction, like a sizable correction, I need at least 5-10%, something like that. I'm going to buy the dip, bro. I'm going to buy the dip. I'm just going to do 1 share, 2 share, just little bits here and there, owning on dips. Like this dip wasn't enough for me. I think I got position around here, and then I brought a dip here or something like that. I can't remember, but I only decided to do this around here. That's the problem. There hasn't been any pullback since then. But like if we get like this size dip, I'm buying. This size dip, I'm buying. That dip, I'm buying. That dip, I'm buying. That dip, I'm buying. That's my legit plan, is to slowly accumulate positions. I don't know this would happen, but one day if I can get that to 100, I'm then going to start wheeling SPY. That's a plan. I don't know if it's a good idea, but I just feel like a diversified portfolio of the best companies in the world, like SPY, would make a really good wheel candidate. Because if you did do a covered call and the market just kept going down, you could just forget about it and just, your long SPY, it's going to go up on average 8% a year anyway, and you could just wait out for it to eventually go back up again. But if you had a stock, it may never go back up to that point again, so your wheels fall into pieces. The wheels have come off the wagon. But that's my thing. I think wheeling SPY might be like a really safe play, but you're going to have at a 663 share price, you need $66,000 to do that, because you need to own 100 shares of it. That's my plan, and to average down as well when I'm buying that position. I think it's a rough plan. I would love to wheel it one day. I think it would be like a really cool way to make a passive income, and I don't know if it would work. Maybe the IV's not there, but yeah. SPY, Reddit. Okay, LEU has been really good for me. I'm at 52%. Brought a position here. 615 US, so about 1,000 Australian. Only bought this 2 weeks ago. I done a full research due diligence on this. If you want to read the report, I'll leave it in the bio. Go check it out. I laid out a full thesis on why I think this is a good investment. Of everything in my portfolio, this is the one that I actually did research the most on by far. So if you're interested, you can check that out and you can see my reasoning why I think it's a buy. Can I just skip this, please? AMD is the only one letting my portfolio down. I didn't do much research into buying AMD. It was a recommendation from a friend who is all in, and he's in a lot. And I'm like, okay, I think from what he said, because I'm busy with other things, like I got time to research some stocks, but other stocks I might just buy on a whim. But if I do that, I'm not going all in. It's like yeah. So I thought I'd just get a small position in AMD. Position size is around 2.5. I've been buying the dip quite a bit in this one. Like, you can see how powerful averaging down is, because when I first put on this position, it was about here. And then every time it dips, I've just been buying a few more shares. It dipped to here, and I did get another few more shares, and it's just brought that average from here to here. But I did stop buying the dip because I don't want to keep increasing this position, because I'm not like, he's fully convinced this is a 10xer, but me, I don't know, I've been around a bit. Once you start worshipping a stock and praying, I think you're in too deep then. Worth a hold. My thing with AMD, I'm holding unless my position is down by 20%. I'm at the moment down 6. I'll sell it negative. If I'm down 20%, I'm out, and I'll never look back. It's called Advanced Money Destroyer for a reason. So look, I'll hold. Could be right. I think it's worth a hold. Look, they are a solid company. Let's face it. They sell solid product. It's just the whole. People are putting a lot of pressure on AMD. They're banking on. They're expecting a lot. So that's why it's kind of swinging around. I've been thinking that maybe it's kind of starting to reach a resistance around this point, because every time it kind of dips down massively, it has like a 5% dip, it kind of springs back up by the end of trading, and that's happened 2 or 3 times now. That can be a good sign that we're getting a resistance around this level. Don't put your life savings in that. Just keep that in mind. It could be a resistance, which might be maybe a good spot to get a position, but we again could be wrong. If it breaks that resistance, it's going to keep going down. So that's my portfolio. Okay, so let's have a look at some stats. We started this challenge and we're at $2,500. Our current portfolio value is at $12,600. The total return, at the moment, we've had a 405% return since we started. Growth terms in doublings. We've doubled 2.34. We've had 2.34 doublings. This is important. The first doubling we went to $5,000. The second doubling we went to $10,000. Currently we're at 12.6, which is about 1/3 into the third. Yeah, that's right, because we're 2.3. To reach $1 million from 2,500 requires 9 doublings. All right, we've had 2. So today we get to do something exciting. We've crossed 10K. So we can put a little line through that. We've doubled once, we've doubled twice. We have 1, 2, 3, 4, 5, 6. We've got 7 more doublings to go. So the next goal for us is 20K. We're going to have a celebration at 20K because that marks our 3rd official doubling, which is big. And because I will be investing and stretching and using margin the entire way through, literally will double. Like, what I'm saying is, let's say if I get to 160, I'm not just going to start playing with 40 grand and keep the 120 safe. No, the full 160 plus leveraged up to 240, whatever, will be used. I'm using leverage this whole way, but using it with guardrails. I'm not just going to like full port max leverage. That would be ridiculous. I want a full crack at this. And we've talked about the leverage. So my thing with margin or leverage is, if you really, really know what you're doing, and if you understand it, use it, go for it. You need to get approved for a margin account, but go for it. What's deemed a safe-ish practice? It depends on what you're investing in as well. is leveraging between 1.2 to 1.5. Because for you to get a margin call, it requires like you probably COVID crash and you're leveraged at 1.5, you still might, I don't even think you would have got margin called then. 2008, if you held from the top right down to the bottom, was 08, like a 70% retraction, you might have got margin called at a 1.5. It's not game over. They will just liquidate one of your positions. Maybe you might be forced to sell some stock, or you can add in some cash if you want to hold through. What I mean is, it's not the end of the day. I've got some cash that I can pull together and use if things are getting hairy, and I did not want to liquidate any of my trades. Like I thought, if I weather the storm, it'll eventually go to all-time highs again. So you just got to keep that in mind. My plan is to just keep fluctuating. Like I might deposit a little bit more money just from this Reddit event because I just don't want to liquidate anything. But ideally, I don't deposit money. I want to keep the challenge true, going from 2.5 to $1 million. So I'm going to fluctuate between 1.2 to about 1.6. Might push a little bit. So if my portfolio increases a lot, goes up by 50% or whatever, that brings my leverage down. If I get it down to about 1.2, 1.3, I'll go ahead and buy more shares. That'll bring my leverage back up to 1.5, 1.6. If my portfolio keeps going up and brings my leverage back down, I'm just going to rinse and repeat, and I'm really going to stretch this leverage to as much as I can. All right, that concludes my portfolio update. I'll give another update in maybe a week or two's time. Maybe sooner. If we get some big events happen, if we get a vicious drop, I'll give you an update. If we get a big increase, I'll give you another update, or just a general update in a few weeks. All right, thanks for watching.